Yes, good morning students. Welcome to the video classes of class 12th accountancy of Sri Vidyaniketan Public School and APU College, Sri Ramnagar. See, business studies I will be handling at the same time. From this schedule I will be handling your accountancy also. Most of all the students has asked me to start with the concept called cash flow statements. As you know already, in a Zoom meet, this time it will not be like a interactive classes how we had earlier. It will be like a live class. So, in a Zoom meeting, in a live class, I will be taking up the comparative statement analysis and a common size statement analysis, all those things. That is the statement of financial statements, like a financial analysis, that comparative profit and loss account, comparative balance sheet, common size profit and loss account and a common size balance sheet I will be handling in the Zoom live class. In pre-recording classes, like in the video classes, I will be handling with the cash flow statement. So, let us start with the introduction. You already know what is a cash flow statement. Cash flow statement means it is a statement which is used to know cash inflow and cash flow of a organization in a given period of time. You might be knowing that, or you might be getting a confusion, what is the inflow and what is the outflow. You see, in accounts you have to think in the business point of view, not in a personal point of view. If you think in a business point of view, if the cash is coming to the business, that will become cash inflow. If the cash is going out of the business, then it is considered as a cash outflow. So, in a cash flow statement, what we are understanding, how much we got a cash and how much we spend a cash. So, how much is a cash inflow and how much is a cash outflow. So, to know what closing balance of a cash, we are doing this cash flow statement. We know that cash and cash equivalents. So, the cash equivalent means it will not be in the cash, but it has a value of a cash. For example, check. You might be knowing check. See, you have to give me a 50,000 rupees. You will not have a cash. What you will give? You will give a check. That check is not a waste of a paper. Check is a what? It has a value of how much? 50,000 rupees. So, that will become what? Cash equivalent. In other words, I can say anything which we can convert into cash within a 3 months, that is considered as a what? Cash equivalents. So, in a cash flow statement, we are understanding how much is a cash inflow and how much is a cash outflow in a particular given period of time. That is a cash flow. See, this cash flow statement, we have objectives as well as disadvantages also. See, the main objective of this cash flow statement is to ascertain the cash generated in a given period of time. For example, what will happen? You have a income, like last year cash is 100 rupees balance. The closing balance of last year becomes opening balance of present year. See, the opening balance of a cash is 100 rupees. Okay. At the end of that year, at the end of the financial year, the cash balance shows 500 rupees. Earlier, how much it was opening balance? 100 rupees. What is the closing balance? 500 rupees. So, how much is the cash you got extra? 400 rupees. To know how much is the cash we have in the organization, we have to prepare the cash flow statement. Hope you are understanding that to generate or to ascertain the cash and the cash equivalent value. So, next objective what we have here, net changes in a cash and cash equivalent. See, the net changes means as a business there will be a purchases also, there will be a sales also, there will be a income also, there will be a expenses also. To make a profit, in simple words, income should be greater than that of the expenses. then only the organization makes a profit. What will happen, expenses are more than that of the income, then organization will be under loss. So, to know what is the net changes of a cash, we have to prepare a cash flow statement. What is the next one we have here? To help the short term financial planning. So, short term financial planning means, assume that you have a cash of rupees 1 lakh, the cash balance is 1 lakh in your organization. Financial planning means you are planning to hire one more accountant for your organization. One more accountant. He is a extra person for you. For him you have to pay a salary. Okay. So, how can you pay a salary? With the amount what you have. How much amount you have now? 1 lakh rupees. How you got this 1 lakh rupees? By preparing a cash flow statement. To know the or to make a short term financial planning, we have to make a cash flow statement. Then what do we have? To ascertain the liquidity of an enterprise. So, liquidation means closing of an enterprise. Liquidity means how much value of a cash and a cash equivalent are there in a business organization. That is called a liquidity. So, these are all called what? Objectives of a cash flow statement. We have a limitations also. The best and the simple limitation of a cash flow statement is that it will not consider non-cash items. You know that cash flow statement. So, in the cash flow statement what we are doing? We are considering only cash transactions. Non-cash transactions will not be considered in a cash flow statement. This is the main drawback. For example, you have to give me 50,000 rupees. Take an example, you have to give me 50,000 rupees. You don't have the cash now. What you are giving? You are giving me a asset called a bike. What you are giving? Or you have a business of computer selling business. You have to give me 50,000. Earlier you have taken a loan. Now you should repay me 50,000 rupees. You don't have a cash. What you convinced me? Instead of a 50,000 cash, you are giving me 50,000 worth of a computer system. Instead of a money, I am getting a computer system. I am happy with that. But you cannot enter this transaction in the cash flow statement because it is a non-cash item. Instead of a cash, what are you giving? Asset. So, these type of the non-cash transactions will not be entered in a cash flow statement. This is the one more drawback. And the other drawback is that it will not consider a present data. By understanding, by collecting the previous data, we have to prepare a cash flow statement. So, this is a drawback. The main drawback is that the present data is not considered. The one more drawback is that here the accrual system of accounting is not considered. In simple words, accrual system is what? The system where both cash transaction and the credit transactions are considered. Accrual system is where the cash transaction and the credit transactions are considered. But in a cash flow, we are considering only cash transactions. We are not considering a credit transaction. So, this will become the main drawback of cash flow statement. Understanding the basics. See, you might take a few time or a few months, the few minutes of a few days to understand accountancy, because earlier some faculty were handling and now I am handling. Don't worry, as always available to you for any clarifications. See, in the further classes, we will be understanding the different activities of a cash flow and the problems and the formats of those activities. Okay, thank you students.